Hi everyone, I'm Martha Stokes and welcome to my tutorial for this week. We're going to talk about gaps in earnings season. This is critically important for you to understand that the normal gaps that form with HFTs, because anytime there's a huge gap up or a gap down at open, it is the HFTs filling the queues milliseconds before the stock market opens. They are the maker-takers of the market. They provide liquidity for the exchanges. The exchanges pay them a rebate for filling the queues and creating a lot of liquidity at the market open. The rest of the day, you will not see the gaps actually form except intraday because it will fill in the data on a daily chart. What we have here is PLTR, and it is trending up nicely, and it is moving in a sideways pattern, slightly higher right now. It reports August 4th. So we have plenty of time for an earnings run. We have plenty of time for a potential upside gap or a downside gap. Gaps are a huge opportunity, and when the market is moving up, you can see that if you hold during these periods of time, right here, that you can wait and the stock will gap and run up. And so you can have a position trade that continues and then gaps up again. And then we have an exhaustion pattern forming here, peaking cycle, and then a collapse, a minor correction over a few weeks. And that patterns into a bottom and then resumes the uptrend. Very common patterns. Gaps are very common, HFTs, but the difference is this an event? Is this related to earnings, or is it related to some other big event in the company, another gap up here? So the difference is earnings now are sometimes problematic, so you have to be careful. HFTs are using AIs in their algorithms, and the AI can make a mistake. It can see the report that they get in or the action that's going on as negative rather than positive. And last a quarter and the quarter before, HFTs were using AI in their algos, and lo and behold, they did gap stocks down that did not deserve to be gapped down, and slowly they moved right back up because the buy-side institutions went, well, this is a bargain, so I'm going to start buying this stock, and they moved the stock back up to its fundamental levels. You should always look at a chart and say, where are the fundamental levels in relation to what's going on ahead of earnings reports? You also have to be aware that if you want to buy into the stock and hold it through the earnings report date rather than selling it just before, hoping to get a gap up, there is the higher risk at this time with the HFT AIs, because no one knows for sure that they have truly patterned out the mistakes and the programming that told the AI that it should gap it down rather than gap it up. And that is a problem that I want you to be aware of, because we had a lot of stocks gapping down when they should have been gapping up or remaining fairly level. The stock has got very small price action right now. This is probably pro traders trying to nudge this and get it up to a higher high or start an earnings run on it. They're trying to get going. So you have to decide when you are getting into the stocks, if you're going to do an earnings run and follow pro traders and get in when the pro traders are, and there's an opportunity for a small gap here because it's moving up, and this is a very strong low here saying, no, this is the end of this downtrend and trend, and it's going to come up. So this little teeny tiny retracement has a deep U shape on a Chaikin's oscillator, which tells us that there were dark pools buying, and that's why the pro traders are in there as well. And also you have flow of funds, and that's showing that as money flow of funds is also showing a positive on a higher section. So we have the indicators confirming that pros and dark pools are still investing in this stock before the August 4th earnings report. So the anticipation is that it will gap up. But you don't know. HFTs, AIs made a lot of mistakes last time. So you have to be very careful and be confident, because if it gaps down, it's going to gap down quite a ways, someplace in here probably. And then you have to wait and hold the stock because it will move back up because the earnings report was a good one. Now, how do you tell whether an earnings report was a good one? You don't look year over year. You look quarter over quarter over quarter over quarter, 4 quarters. You might want to print that off. It's available at NASDAQ.com. So always check and make sure that there isn't any negative news 2 or 3 weeks out. CEOs will warn if there's going to be a negative to the guidance or to the estimates, and that will cause the stock to gap and run down. But earnings report gaps are different right now than standard gaps because HFTs sometimes makes mistakes. So be careful of that. Trade wisely. I'm Martha Stokes, and that's the tutorial for today.